Listen very carefully to what I'm about to tell you, because most people will ignore this advice and stay poor for the rest of their lives. I'm Robert Kiyosaki, author of Rich Dad, Poor Dad, and I've spent over 40 years studying how money really works. Not how they teach it in schools, not how the financial media sells it, but how the wealthy actually use it to get richer while everyone else gets poorer. And today, I'm going to reveal the 2 stocks I would buy in 2026 without hesitation. Now, before you think this is just another stock picking video, let me be very clear. This isn't about gambling in the stock market. This isn't about speculation. This is about understanding the biggest financial shift happening right now that 99% of people are completely blind to. My poor dad always said, go to school, get good grades, find a safe job, save money, and invest in a diversified portfolio of stocks, bonds, and mutual funds. That's what they teach you. That's the old system. And that system is designed to keep you working until you're 70 years old, hoping you have enough money to survive retirement. My rich dad taught me something completely different. He said, Robert, the rich don't work for money. Money works for them. And the rich don't invest the same way poor people do. They understand what's really happening in the economy. They understand the game. So here's what's happening right now that most people don't see. We are living in the biggest wealth transfer in human history. The Federal Reserve has been printing money for years, trillions of dollars created out of thin air, and when you print money, you devalue the currency. Your dollars are worth less every single day. That's not inflation caused by greedy corporations. That's inflation caused by government policy. Now, schools don't teach you this. They don't teach you that savers are losers when governments print money. They don't teach you that your retirement account sitting in cash or bonds is being destroyed right before your eyes. This is what the system doesn't want you to understand, because if you understood it, you'd stop playing by their rules. Let me ask you something. What did your financial advisor tell you? Buy and hold, diversify, invest in index funds. That's what broke people do. That's what people who don't understand money do. The wealthy are doing something completely different. They're buying assets that protect them from currency debasement. They're buying assets that generate cash flow. They're buying real things, not paper promises. And this brings me to the first stock I would buy right now, silver mining companies. Now, let me explain why this is brilliant and why most people will completely miss this opportunity. For decades, I've been saying the same thing. Gold and silver are God's money. They've been money for 5,000 years. Governments can't print them. Central banks can't create them out of nothing. They are real assets with intrinsic value. But here's what makes silver even more interesting than gold right now. Silver is both money and an industrial metal. It's used in solar panels, in electric vehicles, in electronics, in green energy technology. As the world moves toward renewable energy, as governments mandate electric cars, as technology advances, the demand for silver is exploding. But the supply is limited. Most of the world's easy-to-mine silver is already gone. New mines take years to develop. Production costs keep rising. And here's the kicker. The gold-to-silver ratio is completely out of whack. Historically, silver should trade at about 15 to 1 compared to gold. Right now, it's trading much higher. That tells me silver is undervalued, and when something is undervalued and demand is increasing, that's when smart investors buy. Now, I'm not telling you to run out and buy physical silver, although I do own physical silver myself. I'm telling you to look at the companies that mine silver. When silver prices rise, mining companies don't just benefit. They leverage that increase. If silver goes up 50%, a well-managed mining company's profits can double or triple. That's the power of operating leverage. Look for companies with low production costs, proven reserves, experienced management teams, and strong balance sheets. These companies are going to print money when silver starts its next major move. And trust me, with the amount of money being printed by governments around the world, with the inflation that's baked into the system, precious metals are going to shine. This is how the rich protect their wealth. They don't put everything in paper assets that can be inflated away. They own real assets. They own commodities. They own businesses that produce commodities. Because when the currency collapses, and history shows us that all fiat currencies eventually collapse, those who own real assets survive and thrive. Let me tell you what my rich dad taught me about investing during times of currency debasement. He said, Robert, when governments destroy their currency, you want to own things they can't print. Land, gold, silver, oil, food, businesses that control these resources. That's where wealth goes. And he was absolutely right. Now, the second stock I would buy is in the energy infrastructure sector, and I'm not talking about oil companies. I'm not talking about natural gas producers. I'm talking about the companies that own the pipelines, the storage facilities, the terminals, the toll roads of the energy system. Here's what most people don't understand about energy. No matter what politicians say, no matter how many solar panels we build, no matter how many electric cars we manufacture, the world runs on oil and gas, and it's going to run on oil and gas for decades. The entire global economy is built on hydrocarbon energy. You can't replace that overnight. You can't replace that in 10 years. This transition everyone talks about is going to take 30, 40, 50 years minimum. And during that entire time, we need infrastructure to move energy from where it's produced to where it's consumed. That's what these pipeline companies do. They don't drill for oil. They don't take commodity price risk. They simply charge a fee to transport energy. It's a toll booth business model, and toll booths are beautiful because they generate predictable cash flow. Let me explain why this fits perfectly into my investment philosophy. First, these companies generate massive cash flow. They have long-term contracts, often 20 or 30 years, with energy producers and consumers. The revenue is contracted. The cash flow is stable. This allows them to pay dividends. Big dividends. We're talking 5, 6, 7% yields in many cases. Second, they have monopolistic characteristics. You can't just build a pipeline anywhere you want. You need permits, you need rights of way, you need regulatory approval. It takes billions of dollars and many years. Once a pipeline is built, it creates a moat. Competitors can't easily replicate it. That protects margins and pricing power. Third, in an inflationary environment, these companies can often pass costs through to customers. Their contracts include escalation clauses tied to inflation. So as the dollar loses value, as costs rise, they can maintain their margins. That's exactly what you want when the government is debasing the currency. Now, here's what the average investor doesn't see. They look at energy infrastructure and they think it's boring. They think it's old economy. They want to buy the hot tech stock or the cryptocurrency or whatever Wall Street is pumping this week. And that's why they stay poor, because they don't understand the difference between investing and speculating. Investing is buying assets that put money in your pocket every month. Speculating is buying something and hoping someone else will pay more for it later. The rich invest, the poor speculate. And when you own energy infrastructure companies that pay you dividends month after month, year after year, you're investing, you're building wealth, you're creating cash flow. This is what I teach in my books and my courses. Financial education is not about picking stocks. It's about understanding assets versus liabilities. An asset is something that puts money in your pocket. A liability is something that takes money out of your pocket. Most people think their house is an asset. It's not. It's a liability. It costs you money every month. But a stock that pays you a dividend every quarter, that's an asset. A business that generates cash flow, that's an asset. Real estate that you rent out and generates positive cash flow, that's an asset. The wealthy accumulate assets. The poor accumulate liabilities and call them assets. That's the fundamental difference. So when I look at energy infrastructure companies, I see assets. I see businesses that own hard infrastructure. Pipelines you can touch, storage tanks you can see, terminals that operate 24 hours a day, 7 days a week, generating revenue and cash flow. These aren't paper assets that can disappear. These are real businesses with real value. And here's something else most people miss. When the stock market crashes, and it will crash again because markets always crash, these infrastructure companies tend to hold up better than most stocks. Why? Because people still need energy. Factories still need to run. Homes still need to be heated. The cash flows don't disappear just because the stock market is having a panic attack. Now, let me address something important. Some of you are thinking, oh, Robert, should I just go buy an index fund? Isn't that safer? Isn't that what all the experts recommend? And here's my answer. Index funds are for people who don't want to learn about money. Index funds are for people who trust the system. Index funds are for people who believe the stock market always goes up. But what happens when the system breaks? What happens when inflation runs out of control and destroys the value of everything denominated in dollars? What happens when the dollar is no longer the world's reserve currency? Your index fund isn't going to save you. Your diversified portfolio of paper assets isn't going to protect you. This is why I focus on real assets. This is why I own silver. This is why I own gold. This is why I invest in companies that control real infrastructure and real commodities. Because when the paper system fails, and it always fails eventually, those who own real things survive. Those who own paper get wiped out. Let me give you some history. In the Weimar Republic in Germany in the 1920s, people who saved their money in the bank lost everything. Hyperinflation destroyed the currency. Your life savings could buy a loaf of bread, but the people who owned farmland, they survived. The people who owned gold, they survived. The people who owned businesses, they survived. The same thing happened in Zimbabwe. The same thing happened in Venezuela. The same thing happened in Argentina. Over and over throughout history, governments destroy their currencies through money printing. And every single time, the people who own real assets preserve their wealth. The people who trust the system and keep their money in the bank or in bonds get destroyed. Now, I'm not saying America is going to have hyperinflation tomorrow, but I am saying that the trajectory we're on is unsustainable. We have over $30 trillion in national debt. We're adding trillions more every single year. Social Security is broke. Medicare is broke. The pension systems are broke. And the only solution the government has is to print more money. When they print money, they steal from savers. They steal from people on fixed incomes. They steal from the middle class. This is the hidden tax of inflation, and it's accelerating. So the question you have to ask yourself is, am I going to be on the right side of this wealth transfer or the wrong side? If you own silver mining stocks, you're on the right side. If you own energy infrastructure stocks that pay dividends, you're on the right side. If you own real assets that can't be printed by central banks, you're on the right side. If you're sitting in cash or government bonds hoping to retire on that, you're on the wrong side, and you're going to get crushed. This is what they don't teach you in school. This is what your financial advisor won't tell you because he's paid to sell you mutual funds. This is what the mainstream media won't explain because they're controlled by the same financial institutions that benefit from keeping you ignorant. But I'm telling you the truth because that's what I've always done. Rich Dad, Poor Dad sold over 40 million copies worldwide because I told people the truth about money. The truth is simple. The rich use debt to buy assets. The poor use debt to buy liabilities. The rich understand taxes and use them legally to their advantage. The poor pay the most in taxes. The rich invest in financial education. The poor believe school will teach them about money. And when it comes to investing, the rich understand that cash flow is king. It's not about capital gains. It's not about hoping your stock goes up so you can sell it. It's about buying assets that pay you every single month. That's passive income. That's financial freedom. When your passive income exceeds your expenses, you're free. You don't need a job. You don't need to worry about recessions. You don't need to beg the government for Social Security. So let me bring this all together for you. The two stocks I would buy in 2026 are number one, silver mining companies, and number two, energy infrastructure companies. Why these two? Because they both represent real assets in a world of fake money. They both generate cash flow. They both have competitive advantages, and they both position you on the right side of the coming wealth transfer. Silver mining companies give you exposure to a precious metal that's both money and an industrial commodity. As governments print more currency, as demand for green technology increases, as supply remains constrained, silver is going to soar. And the companies that mine it are going to multiply your returns through operating leverage. Energy infrastructure companies give you stable cash flow from businesses that own the toll roads of the energy system. They have monopolistic characteristics. They have long-term contracts. They pay fat dividends, and they can protect you from inflation through pricing power and escalation clauses in their contracts. These are not get-rich-quick schemes. These are long-term positions. These are the kinds of investments that wealthy people make and hold for years, collecting dividends, accumulating wealth, building financial freedom. This is how you get out of the rat race. This is how you stop working for money and make money work for you. Now, I know some of you are going to ignore this advice. You're going to go back to your financial advisor who's going to tell you to buy an index fund. You're going to keep working your job, paying your taxes, saving your money in the bank, and hoping everything works out. That's your choice. But don't say I didn't warn you. The information I'm giving you is the same information I teach to thousands of people around the world. It's the same philosophy that's made countless people financially free. It's the same strategy that's allowed me to retire young and live life on my terms. This isn't theory, this is proven. So here's my challenge to you. Stop doing what everyone else is doing. Stop trusting the system that's designed to keep you poor. Start educating yourself about real money, real assets, and real wealth building. Read my books, take courses, study the markets, learn how the wealthy actually invest, not how they tell you to invest, and most importantly, take action. You can watch all the videos you want. You can read all the books. But if you don't take action, nothing changes. Open a brokerage account if you don't have one. Start researching silver mining companies. Look at energy infrastructure stocks. Calculate the dividend yields. Study the balance sheets. Make informed decisions. Remember, the biggest risk is not taking risks. The biggest risk is playing it safe in a system that's rigged against you. The biggest risk is trusting your financial future to people who don't have your best interests at heart. Take control. Be financially educated. Own real assets. Build passive income. That's the path to freedom. 2026 is going to be a critical year. The decisions you make now are going to determine whether you're on the right side or wrong side of the greatest wealth transfer in history. Don't be a victim. Don't be someone who looks back in 10 years and says, I should have listened, I should have acted. Be someone who takes responsibility for their financial future starting today. This is Robert Kiyosaki. I've given you the information. I've explained the strategy. I've shown you the path. Now it's up to you to walk it. Remember, your financial future is not determined by the government. It's not determined by your employer. It's not determined by the stock market. It's determined by the financial decisions you make every single day. Make them count.